Want to earn 5% passive income just by holding one ETF? And get exposure to some of Asia's strongest banks without stock-picking stress? Hey everyone, welcome back to Wealth for You. Today, we're breaking down one of the most talked about ETFs on the SGX, the Lion-OCBC Securities APAC Financials Dividend Plus ETF, or YLD for short. If you're looking for consistent income, diversified exposure, and a way to make your money work harder, this might just be what you've been waiting for. I'll walk you through what exactly YLD is, what's inside it, how it's performed since its launch on 13th of May 2024, and the big one, whether it's worth investing in for long-term passive income. So make sure you hit that like button, subscribe to Wealth for You, and stay till the end, because the insights in this video could seriously change the way you invest for income. Disclaimer: the securities referenced in this video are for informational purposes only and do not constitute investment advice or recommendations to buy or sell any financial instruments. Always do your own research and consult with a licensed financial advisor before making any investment decisions. Past performance is not indicative of future results. Chapter 1. Understanding YLD. YLD is the world's first Asia-Pacific APAC financial sector ETF, providing investors with exposure to 30 of the largest and most tradable financial institutions in the APAC region. This ETF focuses on companies in banking, insurance, investment services, and specialty finance sectors, offering a diversified approach to investing in the financial industry across countries like Singapore, Australia, Japan, South Korea, and Hong Kong. Chapter 2. Top 8 Holdings as of 31st December 2024. As of 31st December 2024, the Lion-OCBC Securities APAC Financials Dividend Plus ETF, or YLD, is anchored by 8 major financial institutions that form the core of the portfolio. Leading the pack is DBS Group Holdings, one of Singapore's most trusted banks and a consistent dividend payer, making up 7.9% of the ETF. Following closely is OCBC Bank at 7.5% and UOB at 6.5%, rounding out Singapore's Big Three banks. Together, they contribute over 21% of the ETF's total weight, offering local investors both familiarity and financial strength. Outside Singapore, the ETF also includes some of Asia and the world's most prominent banking groups. Sumitomo Mitsui Financial Group from Japan is a major component at 7.1%, followed by Mizuho Financial Group at 5.5%. Both are key players in Japan's evolving financial landscape. Then we have HSBC Holdings, a globally recognized British bank listed in Hong Kong, also making up 5.5% of the ETF. From China, China Construction Bank, one of the country's largest, holds a 4.7% weight. And rounding off the top 8 is Commonwealth Bank of Australia, the largest bank in Australia, with a 4.3% allocation. Altogether, these top 8 holdings make up nearly half of the ETF, providing a strong blend of high-quality dividend stocks across developed and developing markets. From traditional banking to wealth and insurance services, these institutions offer both income stability and long-term regional growth exposure. Chapter 3. Performance since listing. Since its listing on 13th May 2024, YLD has delivered a strong start. As of 21st March 2025, the ETF is trading at $1.165, up from its initial listing price of $1. That's a 16.5% price appreciation in just over 10 months, and that's excluding the dividends you would have received along the way. This solid performance reflects both the strength of the underlying APAC financial institutions and growing investor demand for dividend-focused strategies. Chapter 4. Why YLD is built for passive income. If you're looking for steady, reliable payouts without the hassle of picking individual stocks, YLD ticks a lot of boxes for passive income investors in Singapore. Here's why it stands out. 1. Quarterly payouts. Enjoy a consistent income stream, with distributions made every 3 months. 2. Minimum 5% yield for the first 2 years. Backed by a solid index yield of around 5.9%, this target is well supported by fundamentals. 3. Access to dividend-rich APAC banks. Gain exposure to top financial institutions across Singapore, Japan, Korea, and China, many of which are known for generous and stable dividends. 4. Geographic diversification. Beyond Singapore, you're invested in financial markets across Australia, Malaysia, Hong Kong, and more, reducing country-specific risk. 5. Capital light, digital-first growth. Many of the ETF's holdings are pivoting toward digital services and capital-efficient models, meaning they can grow earnings while keeping costs low. Bottom line? YLD combines stable dividends with long-term growth potential, making it a smart choice for building passive income in a diversified way. Chapter 5. What should you watch out for? As with all investments, YLD has risks too. First, dividends are not guaranteed. If holdings don't pay enough dividends, the ETF might dip into capital, which could reduce NAV. Second, there's no currency hedging yet. SGD strength may eat into returns from Korean, Japanese, or Australian stocks. Third, a 15% withholding tax applies to dividends from Japan and Korea. And lastly, some holdings are near 52-week highs, meaning price correction risk exists. Chapter 6. Why consider YLD now? Here's the big picture. APAC banks are growing. Many underbanked markets like Indonesia and Thailand are coming up, and Asia's wealth is rising rapidly. With a yield better than STI, near the REIT level, but with room to reinvest earnings for growth, YLD offers the best of both worlds, stable income now, and capital appreciation later. Plus, the ETF is rebalanced every 6 months, and top single stock exposure is capped at 7%, so you're not overexposed to any one company. Final thoughts. If you're looking to build steady, reliable passive income without the stress of picking individual stocks, the YLD ETF could be a great addition to your portfolio. Want consistent income? Want regional diversification beyond just Singapore? Want exposure to some of Asia-Pacific's strongest financial institutions? All in one simple investment? Then YLD makes it easy. And it might just be the income-generating solution you've been looking for. What do you think? Will you be investing in YLD? Let me know in the comments below. And if you found this video helpful, smash that like button, subscribe to Wealth for You, and hit the notification bell so you won't miss our next video on building smarter, stronger wealth. The easy way. Thanks for watching, and I'll see you in the next one.